Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 4th, 2025, we're taking a deep dive into the USDCHF currency pair, which has seen some dramatic shifts recently. The current rate stands around 0.804, reflecting a significant decline. Based on recent news, the US dollar has taken a hit following a weaker-than-expected jobs report. This NFP shock has led traders to increase their bets on future U.S. rate cuts, significantly weakening the dollar's appeal. Consequently, the Swiss franc has strengthened considerably against the greenback. Let's pull up the daily chart to see the broader context of this movement. Looking at the daily chart, we can observe a clear, sustained downtrend in USDCHF since early 2024, albeit with some significant counter-trend rallies. Price levels around 0.91 to 0.92 acted as strong resistance earlier in the year. We saw initial breakdowns around the 0.90 and 0.88 marks in spring and early summer of 2024, indicating persistent bearish pressure. Now let's zoom in on the most recent price action, specifically focusing on the sharp drop that aligns with our news analysis. This recent move is particularly pronounced. Here, we've narrowed down the daily chart to show the last few weeks, highlighting the dramatic candle on August 1st, 2025. This single day saw USDCHF tumble from an open around 0.8139 to a low of 0.8024, closing near 0.8038. This sharp decline of over 1.2% in a single session directly correlates with the news of the dollar tumbling due to weak jobs data and rate cut expectations. It's a textbook example of fundamentals impacting technicals instantly. The sheer volume on that day also confirms strong selling conviction. While one news source mentioned the CHF weakening over the past month, the recent price action clearly shows significant CHF strength driven by current macroeconomic events. Now, let's switch to the 1-hour chart to get a more granular view of this recent plunge. You can see how the price broke down convincingly, starting from around the 0.814 handle on August 1st. The subsequent hourly candles show relentless selling pressure, pushing the pair quickly towards the 0.803 area. Volume spikes confirm the intensity of this move. This rapid descent left little room for significant bounces, indicating strong momentum. The 0.81 level, which served as a support in the days prior, was decisively broken and now acts as immediate strong resistance. Notice the brief attempts to rally after the initial plunge were quickly rejected. Transitioning to the 15-minute chart provides even finer detail on the current price behavior. After the major daily drop on August 1st, we can see the pair has been attempting to find a short-term bottom. The price is currently hovering around the 0.804 level, consolidating near the recent lows. This consolidation could indicate either a temporary pause before further downside or an attempt by bulls to establish a footing. Immediate support is evident around 0.803, derived from the low point of the August 1st daily candle, specifically at 0.8024. For short-term traders, a bounce towards 0.805 or 0.806 could present a scalping opportunity, but be wary of the overarching bearish trend. Let's step back to the daily chart again to summarize the key price levels and overall trends. The long-term trend for USDCHF has been significantly bearish since mid-2024, punctuated by intermittent rallies that ultimately failed to sustain higher prices. Major resistance levels to watch for any significant bullish reversal would be the 0.81, 0.82, and then 0.84 marks. These were once support areas that turned into formidable resistance after being breached. The psychological 0.80 level is critically important right now, acting as the immediate floor for the current price action. A sustained break below 0.80 would open the door for much lower prices, potentially targeting levels not seen in years. From a short-term perspective, the recent low of 0.8024 from August 1st is the immediate critical support on the daily timeframe. If this level breaks, expect accelerated selling towards fresh lows. On the upside, The 0.805 to 0.807 area acts as initial resistance on the hourly charts, followed by the broken 0.81 support, which is now a very strong resistance zone. Traders should monitor volume closely. Any significant bullish reversal needs substantial buying volume to be credible. Without it, any rallies are likely to be short covering bounces, offering potential shorting opportunities. So, to summarize our outlook for USDCHF, the immediate bias is strongly bearish. Reasons to be bearish are fundamentally driven by the weak U.S. jobs report and the strong likelihood of more Federal Reserve rate cuts. Technically, the price is in a clear downtrend, having just broken significant support with high volume. A short-term bearish trade could involve entering on a bounce towards 0.805 to 0.807, targeting a break below 0.8024. The likelihood of this bearish continuation is high, perhaps 70 to 80%, especially if upcoming U.S. economic data remains weak. A successful break and sustained trading below 0.80 would reinforce this outlook, making 0.795 a potential next target. On the flip side, reasons to be bullish are currently limited, mainly technical bounces due to oversold conditions. A significant bullish reversal is less likely in the short term, maybe 20 to 30%, unless there's a surprise hawkish shift from the Federal Reserve or a major dovish surprise from the Swiss National Bank. For a long position, look for a clear consolidation pattern followed by a strong breakout above 0.81 with confirming volume. However, given the current narrative, such a move faces substantial overhead resistance. Key events to watch are upcoming U.S. inflation data and any further comments from Federal Reserve officials regarding monetary policy. Also, keep an eye on Swiss economic indicators, as these could influence SNB policy and therefore CHF strength. Always combine your technical analysis with fundamental understanding and remember to manage your risk. That wraps up our in-depth analysis of USDCHF for today, August 4th, 2025. Don't forget to like this video, subscribe to Explain the Charts, and hit the notification bell for more market insights.